Pleasure to talk to you. We now move over to some developments from the Indo-Pacific, where Indonesia has secured a trade deal with the United States that will reduce tariffs on Indonesian goods from 32% to 19%. Signed by Indonesia's senior economic minister, Airlangga Hartarto, and US Trade Representative Jamieson Greer, the agreement exempts key exports like palm oil, coffee, cocoa, rubber, and spices from tariffs. The deal also aims to boost US investments in Indonesia's critical minerals sector, with both countries agreeing to address non-tariff barriers and improve access to US markets for Indonesian products. Additionally, Indonesia will align with US standards on vehicles, medical devices and emissions. While stated as a win-win, the deal comes after a challenging start to 2026 for Indonesia, with market transparency concerns and recent credit rating downgrades. Furthermore, Indonesia has agreed to cooperate with the US on mineral production quotas, especially for key resources like nickel and cobalt, to reduce China's dominance in the global supply chain. The deal is set to take effect in 90 days, offering a promising future for both nations' economic growth. Joining us now is Mitali Nikore, an economist joining us live from New Delhi. Thank you so much for joining us here on NewsX World. It's always a pleasure to talk to you. 32% from 19%, and also this alignment now, which Indonesia has to adhere to with the US standards on vehicles, medical devices and emissions. First of all, how much of a difference will that cut of around 15% due to the Indonesian exports? And also, what does it mean for the economy now that Jakarta has to align with these standards on vehicles and emissions and medical devices?
So thanks a lot for having me on the show. I think, what is very clear when I recently visited Indonesia and, doing a few projects there, what I've understood about the Indonesian economy is that there is now a huge tilt and a huge amount of investment that the Indonesian economy is attracting from a number of Chinese investors. So I think the purpose of this deal is not only about the tariff reduction, but for the US, the purpose of this deal is to counter the Chinese influence that is sort of taking over the Indonesian economy. But for the Indonesians, of course, this is a very, very good opportunity to, on one hand, balance the investment coming from China with imports coming from the US, because of course they have to ensure that some amount of US concessions, concessions to the US economy are made. In exchange, what they've managed to negotiate is a reduction in tariffs, and this is very critical for their garment manufacturing sector, because top brands of the world like Ralph Lauren, Polo, Lacoste, etc. are all manufactured in Indonesia. So for them, the tariff reduction was critical, especially for the textile sector. So huge balancing act there for Indonesia.
Indeed, and Trade Representative Jamieson Greer signed the agreement. Key exempts are involved. Exports like palm oil, coffee, cocoa, rubber and spices from tariffs to the United States. This has been called a win-win. Would you describe it as that?
I would say that, for Indonesia, these exemptions were critical. It's almost like survival, because these products like palm oil, rubber, coffee, they are the core of Indonesian exports to the world, and particularly to the US. So definitely a win. But I don't know if it's a win-win, because they are definitely changing their auto sector requirements, and that will mean it is becoming harder for Chinese electric vehicles to come into Indonesia. They will have to comply with American standards. So definitely a little bit of a balancing act there for Indonesia, but definitely a win for the US, because for them, this opens up literally one of the largest global markets for the auto sector.
And Mitali, how does this compare to other trade deals in the region that have been finalized? You've, of course, got the likes of Japan, South Korea have agreed trade deals, many of whom saying that they favor the United States. But where does this one fit in?
So I would say the one thing that's not there in this deal, which Indonesia has managed to negotiate, is upfront investment requirements. So if you look at any of the deals from Japan, South Korea, or India even, all of them include requirements for these countries to have imports and increase their imports from the US. For example, in the Indian deal or in the Japanese deal, both of them require nearly $500 billion of imports to come in from the US into these countries. Indonesia has managed to negotiate out of that requirement, and that's primarily because of its current income status. But at the same time, in the future, you don't know if that may be levied as well. So I would say on that respect, Indonesia has done fairly well. But how it manages the Chinese investors with the American requirements, particularly in the auto sector, is definitely a tough balancing act for Indonesia.
Mitali, Nikore, thank you so much for joining us. We do have a soundbite coming in from that story. Let's take a listen.
Dan ini salah satu daripada perjanjian yang membentuk Council of Trade and Investment, sehingga ini menjadi forum ekonomi kedua negara, dan ini hasil daripada Agreement of Reciprocal Trade, sehingga seluruh persoalan investasi dan persoalan perdagangan antara Indonesia dan Amerika nanti akan dibahas dulu di dalam Council of Trade.
We stay in East Asia, and the North Korean leader